What's up, guys? It's Rob here, and today we've got to take a look at what the heck is going on in the markets because it is not pretty. Take a look at the SPY. We just plummeted today, down 3.5%. We gave up not only all of the gains that we had yesterday, right? Yesterday was such a green day for the market. We gave up all of those gains and then some and made new lows for the past 2 days in the SPY. Now, we're not actually at new lows for the past 5 days, right? We actually have been lower, but things are not looking good, right? The SPY just dumped. The QQQ actually did make new lows, right? Tech-based stocks did make new lows, and the Russells, smaller market cap stocks, didn't, but also dumped massively, right? Down 4%, and the tech stocks down 5%. So things are not looking good for the overall market. Now, what the heck is going on, right? The market just had its worst day since 2020, right? The worst day in 2 years, the worst day in the entire history of the channel, right? We haven't been making videos as long as it's been since the market's fallen by this much, and it's really tough to see. It's really horrible to see. But I'm not too bothered by it, right? There's a couple of reasons why I'm not too bothered by it. This is something that we see time and time again, right? Stocks move down in a big way, sometimes after a big rally, sometimes after a lot of people are very hopeful, they'll move down in a big way, and I'm not too worried, right? Couple of reasons why. And we're going to use a quote from one of my favorite people, right? One of the best investors of all time, Warren Buffett. One of my favorite quotes from his, probably my favorite quote of his. He says, "Be fearful when others are greedy, and greedy when others are fearful." And we've talked about this quote on the channel before, and it's something that I believe in so much that it's a great idea, in my opinion, to be greedy when others are fearful. And guys, when you see stocks, when you see the SPY dropping 3.5% and the QQQ down 5% and the Russell's down 4%, people are incredibly fearful. We're going to look at a couple more statistics showing just how fearful people are. But at the end of the day, a lot of people like to believe that the stock market is following this formula right here, right? They believe that the stock market, the price of stocks, is somewhat related to the reward minus the risk. And while that's somewhat true, it's not entirely true, right? A lot of people think that this is the exact formula that dictates things. However, it's not entirely true. When you're dealing with the stock market, you're actually dealing with people, right? This is how things would work if algorithms were completely in control of the stock market. If algorithms were the only thing trading, then sure, price would equal reward minus risk. Obviously not exactly like that, but some variation of that formula right there. But really, when you're dealing with people, price equals hope minus fear, okay? So the price of stocks right now is moving down dramatically because people's hopes for the stock market are moving down and people's fears are really rising, right? People are terrified of what's going on in the market right now, and people are essentially panic selling, right? They're looking at the market for the past year, and if you pull out the Russells, it's just dumping and dumping and dumping, and people are talking about recession left and right. People are talking about massive rate hikes incoming. So far, we've only seen 1% rate hikes, right? Not necessarily the most worrisome things, in my opinion, but people are, at the end of the day, very fearful, and that's causing the price of many stocks to be driven down, right? And that's why I like to be a buyer during these times, right? Over the long term, I'm not at all worried about what's going on with the stock market. There are going to be times, I'll admit, that stocks do move down for maybe a couple of months, maybe a year or more. But at the end of the day, even if you were buying, let's look back at history at the SPY, we can look back at the max chart and say, even if you were buying right here, the peak of 2008, right? You bought at the peak and you just held. You would have held through a pretty bad recession, right? You'd been down about 50%. But at the end of the day, if you continued holding through that, you held through all the pain. Here we are in 2022, you're up 164%. I mean, maybe you can time out the market and sell at the exact peak and buy at the exact pit and have a slightly better gain, right? That's possible. But that's not always the easiest thing to do. And there are always going to be times like what you've seen over here where the stock market moves down and then maybe a lot of people are selling right here, expecting it to move down further, and then it moves up. And then you're in a worse position, right? We saw that exact thing happen during the pit during the pandemic, right? A ton of people were selling stocks right around here in 2020. They were expecting a complete market crash because of the pandemic. And lo and behold, the stock market just soared and actually produced incredible gains. And regardless, if you look at the peak of 2008 and held to here, you're up 160%. If you just sold and held cash, you actually look at what the value of the dollar was in 2008. A dollar back then was actually worth $1.21 in terms of purchasing power today. So it's lost about 20% of its value. And that's actually not accounting for this year, right? This is only tracking it to 2020. So it's not tracking the 8.5% inflation that we've seen this year. So really, you lost about 30 cents for every $1.30 that you were holding, right? In terms of purchasing power, just holding the dollar from 2008 to 2021. Whereas if you were just holding the SPY or a similar index, you made quite a bit of money. You still made quite a bit, despite the fact that, yes, stocks did drop pretty dramatically in 2008. And, nobody likes losing money, but at the end of the day, I think it's a whole lot safer to be holding stocks in the market and have a likely scenario where at the end of many years, stocks are going to have risen, right? That's what's tended to have happened throughout all of history, versus holding the dollar. When you look back to even the 1690s, we've just been dropping pretty much ever since then, right? It doesn't look like a very safe thing to hold to me. That's why I tend to never want to actually be selling stocks, even during very fearful times, right? Because we've already dropped quite a bit in the market. You can see it on all the charts. We've dropped quite a bit. And in this case, I agree with Warren Buffett, right? I think that when people are very fearful, that's when it's time to get a little greedier. Now, I'm not saying you should go all in. In fact, I'm not giving any kind of financial advice at all. I'm just saying, in my opinion, I think that now would be a time to be buying stocks instead of fearfully selling stocks, right? Which a lot of people are doing. And sometimes I tend to think maybe it's the wealthier individuals who are creating some of this fear, who are purposefully maybe selling, pushing the prices of stocks down temporarily, potentially to get some retail sellers out there, right? They don't necessarily want retail sellers to be holding the companies that they are. They might want to be the ones holding all of the income-producing assets, right? They might want people to be holding a lot of cash. So we got one last thing to look at, right? What direction do AAII members feel the stock market will be moving in the next 6 months? That stands for American Association of Individual Investors. They do a little survey every week. And you can see that over the past many weeks, we've actually had very low bullish sentiment, 16.4%, 18.9%, 15.8%. On many different weeks here, we finally just got to bump up to 26% of investors being bullish on the market, but still over 50% of investors are bearish on the market over the next 6 months. And that's very high compared to the historical average. Typically, you see around 30%. At the end of the day, there are just a lot of sellers out there, right? There's a lot of people who are fearful of what's going on in the market. There are a lot of people who are dumping their stocks, and that is reflected in the prices that you see on those charts and in the value that you see in your brokerage account. But in my opinion, I think that overall, if you're willing to buy and hold, these tend to be great buying opportunities. I think that there can be a lot of fear. There can be a lot of volatility. You can certainly make a lot of money trading the VIX, especially during volatile periods like this with what we've got going on in Russia, Ukraine, the inflation situation, the Fed raising rates. You can certainly make some money doing that. But if you're a long-term investor and you want a low-stress way of potentially making decent gains, I tend to be a fan of buying and holding a lot of individual stocks that I believe in. That's just my opinion, not financial advice. I can't make you do it, and I'm not trying to. I'm just letting you guys know what I think and giving you my opinion on what's going on out there, because I don't like seeing people get scared out of the market. I think there's a lot of people who unfortunately do get scared out, and all too often. So that's just my opinion. And for anyone who appreciates it, feel free to subscribe to the channel. And other than that, guys, have a great day. I'll see you in the next one. Bye.